Morning, it's Harvey Jackson, recording in my studio, I guess, the West Cell. Tariff Man, he's starting to play his games, and it's actually on now. Probably a full-out trade war, and just wondering how this is going to affect all the economies of the world, especially the ones that he's putting these tariffs on. And he's picking on the three that he actually has the closest and the most trading with first. So I guess collecting his duties will be his top priority, I guess. We'll just see how this all plays out. Uh, so Tariff Man is on. That's all this one really talks about. Japan and China. Like he's pointing fingers at everything here. The Canadian dollar didn't fall apart, but the China and Japan have been keeping their dollar low compared to the U.S. And this is ticking them off because the tariffs don't actually have the same effect if your currency is actually sliding the other direction. Um, and I'll show maybe a better slide of this here, but all it is just what sectors are getting affected. Uh, China says it will play along to the end, and I think they probably have the capacity to do so, as long as they don't run out of partners to play with. And I think knowing how the rest of the world still needs some cheap goods to manage their inflation, it's probably more likely to be a recession, especially in Canada and Mexico, because we had these trade alliances and a lot of goods were getting traded back and forth to the U.S. But I think that's about to end here. Um, Here's just some numbers. China slaps another 10 to 15% retaliation levies on U.S. Agriculture exports. Levies will affect approximately 21 billion of the U.S. exports and I think a lot of that's including egg products. Uh, uh, Beijing still wants to negotiate, of course, and they're trying to exert extreme pressure on China is a miscalculation. That's what one of the Chinese dissidents said there. Um, so there's lots in this here article, but one thing that I want to highlight is there's very likely going to be some supply chain shifts, and that will continue to happen as he keeps this rhetoric up. You can't tell me when in September when he announced that he was going to put 25% tariffs on prior to the election that some of these supply chains are already started to shift. I can almost guarantee that that is the case. How China, well, maybe I'll back that thought up. If there's probably some companies that, oh well, that on again, off again tariff scenario, uh, uh, and I've mentioned this as well before that he pretty well has to do something soon, otherwise he's going to lose his base, and he's probably going to lose all capability of getting things done, as he could lose a fair number of his Congress and Senate. He could lose the majority there. But that could happen as a result of this as well. Um, so the deadline passes. The Canadian Prime Minister Trudeau said Ottawa would respond immediately with 25% tariffs on 30 billion, so 20.7 of US, and another 125 that he's going to put on in 21 days. I don't know what the holdup is. I guess maybe that's a negotiation. Like holy smoke, he's got anything to negotiate. And then Premier Doug Ford told NBC that they could cut off shipments of nickel and transmission of electricity. Well, that would get his attention, I'm sure, if that were to do that. But I don't know if Ontario's in a position to be able to do that. China new tariffs announced on Tuesday targeted wide range of U.S. Agriculture products, including certain meats, grains, cotton, fruit, vegetables, and dairy products. So it's very specific to there, but they also put on they named a few companies as well. I don't have the list here. And like I said earlier, there's recession fears uh, that could actually hit Canadian and Mexico because of our ties. Uh, Another retaliation to probably Friday's meeting with Zelensky. Um, U.S. military aid is going to be cut off completely to Ukraine, and I think that is also another retaliation to Europe actually kind of buddying up and trying to put pressure on Trump as well. So he's just a big bully. That's all you can say really at the end of the day. Here's just a snapshot of the military aid. U.S. is by far the largest and very equal on the financial side, though, with the EU. But the actual military aid itself, supplying munitions and you name it. Crude oil falls with OPEC production increase. This is probably not a coincidence, knowing that he's put on a 25% tariff on, or a 10% tariff on crude oil coming from Canada, trying to stabilize the price from increasing too much. So this increase is to maybe offset the increased price that that he's going to end up paying ultimately in the in the U.S. of the Canadian product that goes down there. There's over 3 billion barrels per day that's going into those those refiners. Here's just a snapshot, and it's all delayed stuff here on the Western Canadian Select, so you can see it's right at $56, and it's a I think it's about $9 to $10 differential. It'll probably increase that 10% differential for sure. Let's just have a look at the markets here. The futures map, if you just look at the markets here, currencies, the ones that are Japanese yen is up, Canadian dollar slightly up, and then until we get some economic news, and then we could fall apart with that kind of stuff. Currencies are all, or energies are all down. Financials are stabilized overnight. Most of the grains are all red. Indices are just basically sideways. Livestock is I'm going to say both sides, depending on which product. Like the dairy products are down, feeder cattle are down, and then metal, especially the rare like gold and silver, are all up as people are going to the safe haven there. Just if I just look at the market here, total canola is down. Let's go 7 to $6. Rapeseed is down the same in euros. Soybean oil is down as well. Palm oil down 129 ringgits. Crude oil is down a dollar or half a dollar a barrel. Soybeans down another 11 cents, trying to hold at the $10 mark. And the wheats are down 2 to 5 cents, and the Canadian dollar is just kind of stabilized there. I don't expect it to hold on, actually. I'm going to be very honest. So if we just look at the chart, you can see that we broke through the uptrend channel. If I were to look at this, I probably would just say that we should be maybe just getting into some shorts here or buy some puts, especially for this year. We should be buying puts here for sure, just to defend it, just in case the market wants to keep falling apart here. This could be it for a little wee bit before we see any recovery. And yet, I think we're going to definitely find different destinations away from the U.S. So there's a lot of people talking about the dependence on our crushers to go to U.S. And sure, last year we had a lot of dependence, but when we were back in the trade war, and it wasn't just a U.S. trade war, we were in the sanctioned by China for two companies having a dumping of dockage, and they were excluded in the market. We arrested the Huawei executive, and we were basically sanctioned as well, punished. But they bought 1.7 million metric tons of our crude canola oil that year. So they didn't buy the seed, but they ended up buying the crude oil, and that was about half of the production of the needs of the or the half of the production of the crush. So we could definitely get back to that kind of shipping lanes. Of course, the prices might maybe have to get reflective, but we'll see. Here's your rapeseed breaking through, but it's actually holding up. The differential between the European rapeseed and the Canadian canola, it's now 152. Here's your soybean oil, it's falling apart. But here's the other issue: is if you don't have the Canadian canola oil there, if anything, I would be looking to go long this one, if we can get brokers to actually maybe go into that position. Here's your palm oil, a big long candle. That's basically following soybean oil, right? So just understand that they're followers, not leaders. Soybeans, we could have some more downside here, so maybe short here as well. It's very likely to be something that you'd be adding on to there. Soybean meal, getting very close to the bottom. One of the major, Canada buys a lot of meal from there, so it's going to get pretty retaliation. I don't know if that's even in the cards for the guys, the farmers that are going to need to buy it, but our Canadian dollar is definitely making an offset there. Crude oil, the article was saying 3 month lows, but you can see that it wasn't that long ago that we had even lower lows than these here. So just keep that in mind. I do not expect this to hold the Canadian dollar. So let's just have a look at the wheats. We're right at the bottom of our trading range that we got down to back in, I believe it's October. It's not that clear. And the back month is not down as much as the front month. And that would be the same for the hard red winter as well. And your Chicago. Your Chicago's right to the bottom there as well. And your milling wheat is just getting us back to those lows, not as low as we were back in August. But everybody's going to get affected with this here. And I would expect wheat is probably going to be the one that will be unilaterally. It's a world commodity. It'll end up getting traded somewhere else. Canada only exports like a few percentage points of wheat to the U.S., so our dependence on them is not as strong. But a strong U.S. dollar actually impacts wheat as well. So because everything's priced in that. And maybe that's another thing that will end up happening. There's frost concerns or something on oats, and oats is actually the only one that's got green on the screen, trying to go up. So maybe oats knows. It would be nice to say. This could even have some more downside if Mexico mentions commodities like corn as a alternative, and it won't be that long that they can actually start buying South America corn here as well. But expect the corn prices to actually rally if that were to start to happen. But you're going to be stuck with a lot more corn in the U.S. And that's all I have for you today. It's not fundamental news. It's all trade news.